Hello, lovely people out there. I'm Kate Hill, and I'm here to give you the best unbiased and honest commentary about the property markets, along with some really awesome hints and tips. There's been a lot in the news recently about Australia's regional property markets, so today I want to talk to you about whether these are worth looking at, so stay tuned. So before we get started, today's question: have any of you recently moved out of the city for a sea or a tree change? Or are you considering it? Tell me your story. I would love to know where and why you're moving. And just really quickly, if you're also interested in the Sydney and the Melbourne city property markets, then you can have a look at these two videos here that I've actually just posted in the last couple of weeks. Okay, getting straight into it. There's been a lot in the press recently about the number of people abandoning city life and moving to Australia's regions. Australian capital cities have witnessed the biggest loss of people into the regions on record. The Australian Bureau of Statistics has confirmed this city exodus trend with the release of some quarterly figures showing the movement of people around Australia. Now, some economists are calling this escape to the regions a stampede, and overwhelmed real estate agents are calling the demand on regional properties a boom. CoreLogic data shows regional home prices on average rising 8% over the year to just January, which is the biggest jump in 16 years. The ABS data shows capital cities saw their biggest quarterly loss of people from internal migration on record, with 11,247 people leaving capital cities and moving to regional areas. Sydney had a net loss of 4,700 people to the rest of the state, building on the 3,700 from the previous quarter. Melbourne also had a net loss of 4,700 people to the rest of that state. The ABS data, which was released a couple of weeks ago, shows that Queensland gained the most people from net interstate migration at plus 7,200 people over the September 2020 quarter, while New South Wales lost the most, which minus 4,100. Western Australia had the largest change in net migration. This was a result of the departures decreasing more than arrivals increasing, but nevertheless. So let's look at why this is happening. Where are some of these regions? Are they worth considering for investment? And will this trend continue beyond the impact of COVID? The city exodus is creating growth in regional centres and towns, which is putting Sydney and Melbourne in the shade. The fringe areas of the major cities, regional cities, hill and sea change towns, are all beneficiaries of this really compelling trend. So while property prices have been muted in the two biggest cities, they've still been quite good. Smaller cities and regional locations are experiencing strong demand and price uplift. Ultra-low vacancy rates is another element of the strength of these markets, putting upward pressure on rents and creating higher yields. The exodus trend has been driven by technology, improved transport links, as more and more people realise the possibilities of working remotely. They're also being allowed and sometimes required to work remotely, and thereby being able to escape the big, expensive, congested cities. Now, this was already a rising trend before the pandemic, with increasing numbers of Australians realising the possibilities of working from home, and more employers being amenable to this. The COVID-19 lockdowns have enhanced that and have turned a steady drift into a stampede by opening the eyes of more Australians to this potential. So people have been leaving the big, expensive cities for some time. Sydney generally loses between 20 and 25,000 people to internal migration every year. And when you look at the figures, the only capital cities that gained population from internal migration in 2019 were Brisbane and Hobart. The next set of population figures should show an even bigger surge towards our regions. A lot of these figures, of course, are compounded by the fact that we're not getting anything from external migration. The borders are closed, no one's coming in, but nevertheless. Now, we're buying in a lot of these areas for our clients. It's what we do. Geelong, Ballarat, Bendigo, Newcastle, the Central Coast a couple of months ago, the Sunshine Coast. All of these areas are booming The issue now in many of these markets is that there isn't enough stock on the market, so it's very competitive for buyers. There are more buyers than sellers, so prices, of course, are rising. Supply is not meeting demand. Some have brought forward their retirement and are selling the 4-bedroom family home in the big city and buying a comparable home in a more affordable place, creating a reserve of cash by moving house. Others, for example, are choosing to work from home and don't need to be in the big city anymore. And perhaps a more temporary trend, certainly in Victoria, was that Melbourne people were really getting fed up with the long lockdowns and were fearful of future ones, and they were getting out of the city. The trend was first visible in regional Victoria, with people retreating to hill change towns within a 1 to 2 hour commuting distance of Melbourne. Locations close to Sydney are also feeling it. And then the impetus rippled further out to regional centres more distance from the capital cities, Orange, Bathurst, those kind of places. It did reach as far north as Darwin, where Melbourne residents and others have headed for the relative safety and affordability of the northern capital, plus the warmer climate. Before the pandemic, Queensland was already on the relocation wish list of many interstate buyers. Now, with many people now working remotely, there is that growing herd migrating north. Sorry, Queensland. CoreLogic figures published early in February 2021 showed most regional jurisdictions recording price growth. In many markets outside the capital cities, there has been record growth throughout the pandemic period. Regional Tasmania has risen in each of the 11 months from March 2020 through to January 21, while the regions of Queensland and New South Wales have had just one down month in those 11 months since the pandemic hit Australia in February 2020. In the 12 months to February 2021, house prices have risen 12.1% in regional Tasmania, 10.6% in regional SA, 9.5% in regional NSW, and 7.7% in regional Queensland. The overall situation for regional Australia is a 1.7% rise in January and a 7.9% rise in the 12 months to the end of January. And this is compared to a 1.7% rise in the combined capital cities. Some individual markets have done considerably better than those averages I've just quoted you, including locations like Ballarat, Bendigo, Albury, Wodonga, Orange, Newcastle, the Central Coast, the Sunshine Coast, Toowoomba, and many other regional centres, which have experienced double-digit annual growth in their median house prices. So let's take a look at a couple of examples. The Hunter Valley region in New South Wales, for example. It is Australia's largest regional economy with an annual output of $55 billion. You've got really affordable homes, low vacancy rates, some new master plan towns. In terms of infrastructure, you've got $3 billion in transport upgrades, the $700 million Singleton bypass, $8.6 billion in resources projects. You have quite a diversified economy, including, of course, tourism, agriculture, horsey things, defence forces, mining, power generation, manufacturing, and, of course, some creative industries as well. And you have links to Newcastle Port, a major employer in that region. There are some really good prospects for the region's future because of its growing diversity of industry, which is a big thing that I look for. While the local economy does currently centre around the number and scale of mining and energy and infrastructure projects, the Hunter Valley economy is steadily broadening. That's really, really important, and that's something to watch out for there. The 2020 Hunter Investment Prospectus, for example, names the following industries as being really important for the Hunter Valley's future. Things like medical technologies and pharmaceuticals, mining equipment and technology and services, oil, gas, energy resources. Moving up to Toowoomba in Queensland. The Toowoomba region is one of Queensland's most vibrant and diverse regional communities. It is Australia's second largest inland city. A lot of people don't know that. The area is experiencing unprecedented growth, with the current rate of development a testament to the region's potential. there's a massive programme of infrastructure development happening, which could propel the city onto the national stage, if it isn't on there already. $13 billion spending on infrastructure, $1.6 billion was spent on the second range crossing. You've got affordable housing prices, $1.1 billion on that inland rail project. Strong, diverse economy, manufacturing, agriculture, tourism, resources, government administration offices. The recently opened Toowoomba Second Range Crossing, like I said, was a $1.6 billion project, and it's helping to cement Toowoomba as a nationally recognised intermodal transport hub. The city also has proximity to the Surat Basin Resources Province, as well as its more traditional, like I've said, agriculture, tourism, manufacturing base. You've got a hospital, you've got colleges, you have affordability, low vacancy rates. And I'll tell you what else is interesting. On a national level, Toowoomba has the highest uptake of the federal government's Home Builder Grant, and that confirms the popularity of the region's housing market. So watch this space. Now, I do expect ongoing growth as Australia heads towards a new real estate boom, led by locations which lie in the path of good infrastructure development, a diversity of industry, strong local economies, and strong population growth. But I think the cities will do pretty well too. Now, to finish off, everyone, as you all know, remember, different areas doing different things at different times for different reasons. If you are investing, then every area is not suitable for everyone. There's different price points and different yields and different property types. So I will keep you posted on what is happening in the nation's property markets as the year goes on. Please don't forget to just quickly subscribe to the channel, leave a comment, hit the like button. Really appreciate your support. I will see you soon. Bye.